good, everybody? Happy Wednesday? It's already Wednesday. Welcome to the closing beat. Hopefully everything's working fine. You can hear me just perfectly. We've got our, this is a show that we do just to go over the stock market real quick, give you the good, the bad, and the ugly for the day. And I should mention that tomorrow we're going to do an open house. You hear me talk about wine and wealth every now and then as a class that we do for our customers. Well, tomorrow we're going to do that publicly, and I'm going to share something new that our customers haven't even seen yet, so it'll be kind of exciting for everybody. Also, I'll kind of just go over what it's like to work with us if you have any interest or you've ever considered working with us. Also, if you're one of our customers, Sunday, if you're one of our customers, don't miss the email coming out on Sunday. It will be with a subject line you will not miss anyways. You will want to click on it. And so we're putting together some really cool sort of background information here to help you guys better understand what to expect, what's going on, and everything like that, and just trying to simplify it as good as possible. Okay, on the screen you see the market's higher yet again today. Just keep pushing higher little by little. The Dow another 150 points higher, the S&P another 1%, and the Nasdaq another 1% on the day. Actually, that's sorry, that one's not quite updated. The S&P and the Nasdaq didn't come through right, but the chart at the bottom is right, and so that's what you see today. A lot of back and forth, right? A lot of people willing to try to pick a top, and a lot of people willing to continue buying this market on any dip. So we'll just dive right into it as we go here. We'll cover everything, of course, as we normally do. Mortgage applications, those came in stronger than expected. That's the people going out and either refinancing their homes or looking to purchase a new property, existing property, and filing for mortgage applications. The latest data came out, which is better than it has been since 2010. So really sharp spike higher in mortgage applications. Remember, rates had come down a little bit. So during the whole last 3 months, rates had come down, and so people look to be taking advantage of that. That's the second time in a row, by the way, that number has kind of perked up there. Well, let's go over to the markets. That's the fun part anyways. Here you go. On the screen there, you've got the S&P 500 remains right at the resistance level. That horizontal line you see on the charts is purely a known resistance area that all types of investors are looking at. 2,600 is the magic number that everybody's looking at there. And right now, we're sort of not committing above it, although we did poke above it, and we're not committing to the downside. So if you are someone who is betting on the markets going higher, you feel like you're in the right. You feel like everything's good and it should be fine. If you're one who is betting on the markets going lower, then you're going, all right, any day now, right? It's about to go lower. We're almost there. We're at resistance. And I think you're probably right. I think the markets would pull back in this area here. Earnings are what's helping us consistently sort of push higher. That's the S&P 500. I'll point out the Russell 2000. That's your best performing index for the year so far. It's up 7%. The micro cap, if you follow that sort of thing, I think it's IW. There's an old ETF for that one. Yeah, it's the IWC. That's the micro cap Russell 2000. Really small companies. They're the best performance, 7.5%. So all that small and micro cap stuff, if you follow that, they're the best performers for year to date so far. So kind of interesting there. Tomorrow's focus is going to be on earnings. I'll go back to the chart there. Tomorrow's focus is going to be on earnings. We'll go over the earnings, of course, from today, but tomorrow you've got Morgan Stanley, you've got American Express, Netflix, of course. We'll cover that in a moment. And so be ready, right? If you've never been involved with Netflix when they report their fourth quarter earnings, you might want to check out yesterday's closing beat where we went into detail about that. It's going to be an exciting one, I can promise you. So we'll cover that. Let's look around the different sectors here today. The banking stocks, of course, they're going to be the front headline news. They had Goldman Sachs, Bank of America came out with earnings. Goldman Sachs, just as they always do, remember 91% of the time they beat on earnings. So they reported today and did. It was a great earnings announcement. So that was one of the boosts for the sector. Bank of America also the other one. If we look at Goldman Sachs real quick in this category, and if you're joining us brand new for the first time, we always start with any news to cover. We go through the broad-based indices for those of you that are just focused on the index or index fund investing, whatever. We then go down to the individual sectors so that those of you that maybe are more diversified and you invest with including as many sectors as possible, but you include them rather than just buy the index. Well, you'll have something to look at. And then from there, we go on down to the individual stocks for the active traders, because there's a handful of you out there. Anyways, Goldman Sachs, there you go, 10% gain on the day. They beat very, very nicely. They had a lot of good things to say, actually. They beat on earnings by like $1.50. Earnings were expected at $6.04 per share. They came in at $4.45. Revenue came in better, 12% higher actually year over year. The interesting thing here, if you follow this sort of thing, on the conference call, you got a new CEO. He's sort of been tested with this latest scandal out of Malaysia, which really I don't think is their fault. I mean, they're getting sucked into this. They're going to pay a ton for it. But anyways, he started the conference call by addressing it, right? So if a company has an issue, here's how this works. CBS was a great example. Remember when CBS, the CEO, Leslie Moonves, he did some bad things there supposedly over the years. I won't claim that he's guilty or anything. If he is, I don't know. I didn't follow up with it. Anyways, they sort of wanted to kick him out. And when that was going through its, progression, he would do the conference call and he'd wait till the very end and he wouldn't take questions. He wouldn't even address it throughout that conference call. It's very normal for companies to not report the negative stuff and try to like dodge around it and stuff. This guy at Goldman Sachs, the new CEO, went right into it, covered it right away, said they're going to reserve their litigation reserves so they can cover anything. Of course, they're going to fight it, and they believe they're not wrong. So we'll see. But they've already got ahead of the curve there. So that was very positive for the banking stocks. Now, the Goldman Sachs beat by a mile, right? So if you want to know, did they beat earnings? Yeah, they beat by a mile. They also have been beaten down, so expectations were pretty low. To give you an example, if you follow the fundamentals on this stock, it's trading at about a 7 PE, which is, if you look at all the financial stocks, I mean all of them, it's the third cheapest in the entire sector, right? So it's something that definitely grabs some attention there if you're looking at it at a fundamental basis. Now, from a technical perspective, meaning looking at the charts, of course, it's sold off rather aggressively. So you kind of have a recipe for, a good little bounce there, and that's what it so far has. Bank of America, not quite in the same category as far as how well they did on earnings. They did beat earnings by only about 7 cents. They were expected to make 63. They made 70. Profit came in really well. If you follow profit forecast, results came in 3 times better than expected. And this stock, if you follow fundamentals, trading at 11.5 PE, which is, it's not too hot, it's not too cold if you compare them to the big banks, but it's still cheaper than Wells Fargo. So suck it, Wells Fargo. You could tell I'm not a big fan. Anyways, that's what was going on in the banking sector. Now, before I move on from this, Morgan Stanley, I'm sorry I'm jumping around a little bit today. Morgan Stanley's going to report tomorrow. They beat on earnings 78% of the time. They beat on revenue 75% of the time. Just for fun, again, I just like throwing this stuff out there. I'm not telling you what to do with your positions. I'm not saying that we're doing this with our accounts here. We're not active traders, but it's sort of fun to follow this stuff, right? Day to day, we get to check out some different things. So that'll be tomorrow. American Express also reporting earnings. They've also beat earnings 78% of the time, but they beat on revenues only half the time. So it could be a bit of a mixed bag there. That one's not as clear. All right. That's that one. I wanted to go through the banking stocks. Consumer staples. If you go into the consumer staple space, they were one of the weak areas today. Lost about 0.5%. Not really that big of a deal. Almost erased all that it made yesterday. And I put it on to talk about it because anytime that happens, you like to see it. You like to know about it. Here's a great example. Big sell-off and erases it all the very next day. That's a notable event that, remember if you go back and you look at 1224, 1226, which was the next day there, we talked about that bottom being a significant bottom. So that's as clear as I could say it. I was looking to see if the same happened there. Turns out it's not really that exciting. Consumer staples not that, didn't really sell off that much, so I'm not too concerned about that one. Sector-wise, semiconductors a little lower on the day. They're stuck right at resistance as well. You see the blue line there, that's the 50-day moving average. And then oil Where'd oil finish? The oil service companies, some of the oil holders, they were down just a touch on the day. Nothing really to get excited about there. Banks really dominated everything, whether it's the regional banks. Here's KRE. This is the ETF for regional banks, if you follow that. And then, of course, the XLF, all very strong on the day. If we look at REITs, REITs continue to move higher. ICF is the one I'm looking at here for the moment. There's a bunch of good ones in there, though, if you like trading REITs from an ETF perspective. Let's move on. You got United Airlines. We talked about this yesterday after the market. It was good earnings, right? So that came out yesterday. I put it down in the description if you want to read. They beat by 39 cents, I believe. Stronger revenues. They also announced guidance, which came in as expected, and they're expanding here in the States. So they have this whole expansion plan. It's kind of interesting. I don't know if it's like that interesting to you. But their expansion plan here in the States has really helped their overall customer base. They don't normally mention like how many customers they've grown to on an active basis. They did this time. It was kind of interesting. Oh, we forgot to do U.S. Bank. U.S. Bank is a regional bank out of the Midwest there. They had earnings come out just a little bit better than expected. This trades at 13 PE, by the way. So it give you a perspective of everything we talked about before with Goldman Sachs and Bank of America. They got steady sales growth, by the way, 2.2% sales growth year over year. It's not amazing, but for a bank, it's pretty good if you compare it to the rest of them. What's interesting with this one, 42% profit margin. This is the third highest profit margin, net profit margin, out of all the regional banks, right? So all over the United States, not just the Midwest. So really, really cool there, what they did with earnings. I don't know how much you guys want me to go into this stuff, so I just kind of touch on it. A lot of this information is also in the description of this video. Ford, a little bit lower today. They lowered their fourth quarter earnings guidance, which it gave us a heads up. Things aren't going to be doing well there. Nordstrom, shoot. Oh, that's just going to ring the whole time. Let me go grab that. Nordstrom, if you can still hear me, they were downgraded on the day. I'm all here by myself, so I'm just going to turn this guy down. That'll do it. Hey, that's a first, huh? Nordstrom downgraded on the day and just trying to move smoothly through that, huh? Yeah, hopefully you heard that. The stock was lower, but I put it on the list because it moved up off of the lows. I thought that was pretty interesting. Goldman downgraded them, and also Telsey. I don't really follow them, so I can't say what they said. Snapchat, their CFO left today. Stock was down, 14%. Wasn't that bad earlier. Down 14%. The company also took the opportunity to try to sneak it out there in the news, their fourth quarter earnings guidance as well. They report on February 5th. We've got a little bit of time on that one, actually. Yeah. Okay, that's all I really have. Oh, Sears won the bid, by the way, for the chairman. He won the bid to buy the company. Apparently, they're not going anywhere. You have PG&E, the the utility company out of California. They're going to be replaced in the Dow Jones Utility Index, if you're interested in that. And then TFX is going to replace SCG. So I don't know if you guys care about this. It's SCANA. They're going to replace TFX in the S&P 500. Just thought I'd point that out. Oh, CSX came out with earnings, the railroad, here after hours. Oh, did I look? I didn't look. Small down move on CSX. Probably their operating ratio. Can I look at this? Let me see if I can find it real quick. Remember, railroads only, everybody cares about the operating ratio. That's going to be the big one. Their operating ratio came in at 60.3. Everybody was looking for 60.1 or better. So a little bit higher. I don't know. That might explain why it's not like plummeting, or I bet you that's what everybody's focused on. We'll probably cover that more tomorrow so you get a good clean idea. They also announced a $5 billion share buyback, if that helps, but not a whole lot of action out of the railroads at the moment. Yeah, I think I pretty much covered it there. Class on personal budgeting, stipend somebody have checking and saving to keep extra cash. Yeah, we have one for our customers, actually. I think you could buy it on the website if you want. Don't feel like that's a sales pitch or anything. It's just from us being lazy. We haven't taken it down yet. But it's available. Every one of our customers has access to it. And we're building a library, so it'll be in there once that's all set up and ready to go as well. Cool. Well, that's all I have for you. I'm going to get back to work. Apologize for being a little bit all over the place. It's going to be like that when there's earnings here. Remember that earnings, the bar has been set low. I'm really looking forward to Netflix. If you've never traded Netflix, fourth quarter earnings are always the most exciting out of all of them. They have an average gain of over 12% just on the day that they report earnings, the next available day. So you're going to see fireworks. I look back every single earnings report that's out there available. The fourth quarter earnings are the really exciting ones, but it's already up 50%, right? So the stock's already had a great move. Are we supposed to expect some monster blow off top from earnings? I can tell you this, if it does gap higher on earnings, traders will short that. That will be one that you see starts higher and finishes lower. Not telling you what to do, just telling you what you might see. All right, if we helped you in some way through all this nonsense today, it'd be great if you hit the subscribe button. If not, I totally understand. Check out a different video, maybe look a little bit better than today's did. But we'll be back tomorrow to cover all of this all over again, and our open house tomorrow at 8 o'clock. Don't forget, tomorrow night, Wine and Wealth, open to the public, going to teach you something new or show you something new. And then for our customers, you want to check it out as well because we got something new coming your way. So we'll have that up there. And bring your questions. If you just want to know what it's like to work with us, like I said, I'm an open book. There's no question I won't answer. We sort of pride ourselves on that and set the business up like that so that you can ask any question and it doesn't matter, we can give you the answer. So any question, as long as it's not like, should I buy this stock, right? We know that one's off limits, but any question I can answer. We'll be around 8 o'clock tomorrow. Enjoy. Thanks.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.